hosted by IIFL Securities Limited. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Anupam Gupta from IIFL Securities Limited. Thank you, and over to you, sir.
Thanks, Lizan. Good morning, everyone, and welcome to the post-results conference call for Tube Investments. It's my pleasure to have the leadership team from Tube Investments joining us for the call, including Mr. Vellayan Subbiah, the Managing Director, Mr. Gurugappan, the Chairman, Mr. Mukesh Ahuja, who heads the Tube business, Mr. Srinivasan, who heads the metal forming business, Mr. K.K. Paul heading the cycles business, and Mr. Mahendra Kumar, who is the CFO with the company. I will hand over to Mr. Vellayan for opening remarks, post which we can have the Q&A. Over to you, Mr. Vellayan.
Thanks, Anupam. Good morning, everybody. We just discussing our results for Q3. Our PBT for the quarter was at 161 crores. Revenue in Q3 was 1,701 crores compared to 1,309 for the same period the previous year. The PBT was at 161 as against 145 the previous year. The return on invested capital annualized was at 49.6% compared to 51.7%. And the free cash flow for the quarter was 172 crores, which improved NWC levels from Q2 FY2022. The PAT for the quarter is 120 as against 107 for the same quarter last year. Just a quick summary on each of the businesses. For engineering, revenue was at 996 crores compared with 733. With all the businesses, one of the reasons for the revenue jump has also been the price of raw materials. The PBIT for the business was at 87 crores as against 102 in the corresponding quarter of the previous year, primarily due to higher fixed costs incurred towards special maintenance expenditure and plant layout changes. Metal form products, the revenue for the quarter was at 330 compared to 315 in the corresponding quarter of the previous year. PBIT was lower at 32 as against 38 in the corresponding quarter of the previous year due to lower volumes in railways and door frames. Mobility registered revenue of 280 compared to 234 in the corresponding quarter of the previous year. PBIT was flat at 15 crores due to a higher three-wheeler free-off costs, which are also part of the mobility team right now. And others, the revenue was 159 compared with 79. Industrial chains has done very well this quarter, and PBIT for the quarter was 11 against 8 in the corresponding quarter of the previous year. At a Concall level, obviously now we're consolidating CG and Shanti. The revenue was 3,410 as against 1,700 crores the previous year because it didn't have much of CG in it last year. The PBT was 353 crores as against 158 in the corresponding quarter of the previous year. CG Power, in which the company holds a 52.61% stake, registered a consolidated revenue of 1,551 crores as against 820 crores in the corresponding quarter of the previous year, and PBT before exceptional for the quarter was 174 as against 64 the corresponding quarter in the previous year. Shanti Gears, in which we have a 70.5% stake, had revenue of 95 as against 65 in the corresponding quarter, and PBT for the quarter was at 17 as against 10 in the corresponding quarter last year. Commenting on the financial results, Mr. Arun Murugappan, Chairman CII, said the results for the quarter show a steady performance by all businesses. The company is closely watching the impact of challenges of the drop in auto industry performance, which has impacted domestic tubes and our metal form business. Performance in exports has witnessed healthy growth in tubes and industrial chains business, and CG Power has also delivered consistently high results across all of its business segments. So broadly, let me stop with that. I mean, I think like Mr. Arun Murugan's comments, our concern on the auto businesses is really what's going to happen to demand in the coming quarters because of the drop that we saw, especially starting in December last year. Otherwise, we're quite encouraged by kind of some of our growth opportunities, and otherwise, I would say kind of things are more or less in line with what we expected. So let me stop with that, and I'll turn it over to you for questions.
Thank you. Ladies and gentlemen, we will now begin with the question and answer session. Anyone wishing to ask a question may please press star and 1 on your touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. Participants, if you wish to ask a question, you may please press star and 1. The first question is from the line of Nishit Jalan from Axis Capital. Please go ahead.
Hi, sir. Congratulations on a decent set of numbers despite tough times. So my first question is on exports. This is one segment which we have scaled up very well on the engineering side, especially. Just wanted to get your sense as to where are we in terms of overall share of exports in our total revenues, and what would be the target in the medium term? I think in the past we have shared about target to scale up exports in the cycle segment as well. Would we have some opportunity on the metals form business? Can exports be a significant part of revenues in the next 3 to 5 years compared to where we are today? That would be my first question.
Yeah, so let me just first I'll let Mukesh talk about exports in his business, in the engineering business, and then we'll come back and give you an overall perspective. Because Mukesh has the largest part, and so let him talk about exports in his business, and we'll come back and give you an overall perspective. Mukesh?
Good morning, Mukesh this side. This year has been a very good year for exports because a part of our strategy to keep on enhancing exports as a total pie of the engineering division. And we are getting closer to the target what we set it for ourselves, but there is still good headroom available for the new product category for which we just finished even a capex cycle in Q3, and we are bullish about exports going forward. And to just give you numbers, maybe our revenue from the exports is around 20% in the engineering division for the tubes which is getting exported. Yes, sir, you can continue.
So again, coming back, I think the encouraging news for us is that in the engineering business, like Mukesh said, he hit 20%. We'll have to see what numbers we sustain at. We would like to get to 25 to 30%, at least starting in the engineering business. CI cycles is another area where we have an opportunity for export. And that's something that Paul and his team are just starting off on. So it'll take a little while to pick up. In general, the other area in which we've had good export growth is on the industrial chain side. And industrial chains is getting a significant portion of their revenue now, almost close to 40% from exports. So these are the three segments in which we see immediate opportunity. And like I said, metal form will kind of continue to take a while. But in the segments in which we see opportunity, we definitely like for at least 30% of the business to come from exports. And we'll have to see when we can get there, hopefully in the next couple of years.
Okay. So just to get slightly more details in terms of this exports have scaled up very, very quickly in the last couple of years. Do you think that it's mainly because of the China Plus One strategy? Which are the key reasons, region, Asia or other countries which you are targeting, or where you are seeing stronger traction in exports across both industrial chain and engineering segment?
So definitely, it has been because we've been very focused on it from a strategy perspective. Mukesh, do you want to talk about your regional split, kind of in terms of engineering, kind of where you're getting your exports from?
Yeah. Like Velan explained, we as a part of our strategy, we are very focused on the exports, and the major focus has been how we can continuously increase the OEM business, as well as whenever the opportunity comes, we keep focused on the distributor side of the market. So this year, maybe there is a good increase in the US-based volumes for TPI, and even the large diameter segment also. We have done a very good exports for the Europe market, which has given a very good run for this year. And we hope to keep this momentum sustained going forward, and we improve towards, like Velan was trying to say, around 25% going forward for engineering division to increase the exports revenue.
Okay, thank you for the clarification. So my second question is more on your strategy on electric vehicles. I know that you are developing electric three-wheelers already. Probably we will see that product in 1Q. Recently, you acquired a 70% stake in Celestial E-Mobility as well, which is primarily into electric tractor segment. So because what our understanding was that probably we will see electrification happening more in two-wheelers, three-wheelers, and probably in lower-end LCVs, right? But tractors electrification could be at a much later stage. So just wanted to understand what is the strategy that we are looking at, and are we looking at Celestial more as a technology kind of a thing, or we are actually looking to get into electric tractor segment in a bigger way?
Yeah, so the short answer is we are actually looking at getting into the electric tractor segment. We definitely see that tractor segment as a big opportunity. So just to give you a broad approach to our electric vehicle strategy itself, the one thing that we see is that we see a much better approach to electric vehicles at the productive end of the spectrum versus the consumptive end, right? So the areas we're staying away from are like two-wheelers and passenger cars, which are more consumptive. And we're focused on the more productive end of the spectrum, where the vehicle is actually an asset that earns income for the owner. Right? So if you take three-wheeler, passenger and cargo, that's definitely the case. And all the segments that we're looking at in electric are going to have that characteristic, which is the focus on the productive end of the spectrum. Now let's talk about tractors for a bit, right? We actually think that, and so basically both three-wheeler and tractor, the reason we chose them as the first and second category to get into is because we think that these two categories are very ripe for disruption. The three-wheeler, if you take kind of the battery capacitization, so as you know, the battery basically drives, between 40 and, in some cases 50% of the cost of the vehicle, the battery and BMS and in some cases the controller as well. So in effect, what happens with battery capacitization, if you take the two-wheeler, for example, the average two-wheeler travels 40 kilometers a day. Right, so it's about 1,000 kilometers a month is what an average two-wheeler travels, 40 kilometers a day. But if you don't capacitize the battery to over 100 kilometer range, people have range anxiety and don't buy it. And so there's a slight mismatch because you end up with a higher cost point when you need to deliver on the vehicle to get over range anxiety. With three-wheeler, we see this as almost perfectly matched because a three-wheeler on average does about 100 kilometers a day. So you capacitize it to about 130 or so in range, and kind of that the economics start working out a lot better. The second is that we really believe that in three-wheeler, the user, right, kind of either the auto rickshaw owner or the auto rickshaw driver, in some cases they can be the same, will definitely see the financial benefits on a much more tangible month-to-month basis in terms of how it looks at their cash flow. And we're seeing that tractors have a very similar characteristic, especially because power in some cases is kind of quite subsidized in the agri area, and therefore, if you take the running cost per day of a diesel tractor, especially during cultivation season, it's extremely high because of the diesel consumption of the tractor. and therefore we see the economics of moving to battery as beginning to play out. And we actually think that the crossover point on both three-wheeler and tractor is going to come much before the crossover point in other vehicles. That's between EV and IC. So we are actually very excited about the tractor space. Our sense is that we will come out to the market with a lower horsepower tractor, which also has its niches. In India, almost, I would say 80% of the market is between the 40 and the 50 horsepower. I mean, so if you take north of 35, right, so 35 horsepower north of there. But we'd like to come out with a lower horsepower tractor by the July time frame, if not earlier, and bring that tractor to market. So our intent is definitely to get into the e-tractor segment. I don't know if that answers your question.
No, sir. Thank you for the detailed answer. So just one follow-up. Would you like to highlight on your distribution strategy on three-wheeler, electric three-wheeler, because we need to set up distribution reach for that. And a connected question is, would you look to get into electric segment in your cycle segment, or you would want to stay away from that as well?
Yeah, so we will definitely get into electric on the cycle as well. As far as the distribution strategy for electric three-wheeler, I'll let Kalyan Paul answer that, who's on the call too.
Hello, this is Paul here. I think for the distribution strategy on three-wheelers, we'll start with the southern states, look to consolidate there, and then gradually move towards west and north. It's a strategy that we have. So in line with that, we've had the distribution network, initial people who would be interested. We've worked out a formula, we've discussed with them, and we are quite bullish about, moving forward with that plan. That's this answer.
Okay, sir. Thank you. So my last question would be slightly more accounting related. You had talked about a few non-recurring expenses in the engineering segment because of plant layout, and also three-wheeler operating expenses on the mobility segment. Would it be possible to quantify these non-recurring expenses so that we can get a sense of underlying profitability? And the related one is your unallocable income has gone up significantly, almost 20 crores. It used to be 10 crores loss. So I think this is also something which has impacted your segmental margins. So any change in accounting over here?
Mahendra, do you want to answer that?
Yeah, sure. Yeah, so as far as the one-time expenditure in TPI or engineering business is concerned, I think it was close to about 12 crores, between maintenance and some layout and related expenses. And then similarly, EV related expenses also, I think we spent close to around 8 to 10 crores for the last 5-6 months. Then what was your other question? Other income, is it?
No, sir. Within the segmental results, if you see, we have seen a much sharper margin cut. I think your unallocable income has gone up to 20 crores, which used to be 10 crores loss. So there is almost a 50 crores swing in which is unallocated to segments. So just wanted to understand why is that?
Okay, so the unallocated income is basically the other income which comprises various things.
Mr. Mahendra Kumar, we are not able to hear you clearly.
Is it better now?
Yes, a little better. Please proceed.
Yeah, the unallocable income basically comprises of various things. It includes things like exchange impact, exchange fluctuation gains, and we also gained something in the export incentive, which we did not recognize earlier for part of the period, which we recognize now. And then we also have things like there were certain property-related receipts which we sold earlier part of the year. So that was like sale of intangible assets. So those were the gains which happened in the last.
Okay, thank you, sir. I'll get back in the queue.
Thank you. We'll move on to the next question. That is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yeah, hi. Thank you so much for the opportunity. Hi, sir. So just a couple of things. In terms of, if you look at, while revenue growth has been very strong, but that's also because of the steel prices. So I think volumetrically, understanding the company may be a little better. So in terms of utilizations for the plant, if you can just help us understand, because we are seeing constant decline in two-wheeler volumes and your tube goes major part there. Or is there a market share gain that you've been able to kind of, offset the decline in volumes at the industry level? Some thoughts that will be useful.
So now I would say in engineering, we do have more. I mean, it's not as as full out as we were in kind of the first and second quarter. So there's slightly more capacity there. Definitely, we've seen slight softness kind of because of the auto slowdown. And so from a utilization perspective, I would say that we have bandwidth in kind of all of our businesses right now for growth.
Okay. So there's an element of operating leverage which will still play in when you get higher volumes, is what I was trying to understand. Okay. Sir, also if you look at, last 3 quarters, you've generated almost about, I think, combined close to about 450 crores of free cash now, as per your press release. So if you can just broadly understand the capital allocation strategy going forward, because at a console level, your debt levels have, come down significantly. You barely have any debt on balance sheet. So how should we look at it now in terms of capital allocation? There's a strong free cash generation that is happening. So part of it is going to EV, we do understand. But beyond that, how should one look at it? And also cash flows from CG Power. Will will CG Power do its own investments, or will, it will come into Tube, and will you look at it on a console basis? Some thoughts that will be very helpful for our understanding. Thanks.
Sure. No, I think, yes, so definitely on that front, the situation is quite encouraging because, like you said, both businesses are generating cash. CG also went net debt free, so because we were able to sell that Kanjurmarg property. Yeah. So, in my sense, we will have both both CG and TI generating at least north of kind of 400 crores each in free cash flow. And so CG will do both. Next year, we will likely kind of dividend some of that back to TI. But CG will continue on expansion initiatives that it's identifying internally. And we've looked at, several areas within CG where we will drive expansion. So you can... and one of those obviously is going to be on the EV motors area where we still have to find a partner, kind of look at a way of getting into that business. But there are opportunities for investment within CG itself. Then if you take the money that CG dividends back up to TI and they take the free cash flow in TI, that's where I would say we've been fairly busy through kind of the whole lockdown period identifying opportunities for growth. Especially after we finished the CG acquisition, we started looking at several areas, electric vehicles kind of being one of them. We are pursuing and beginning to look at kind of other businesses as well, which as soon as we take through and get approval internally, we will start discussing, with you. But we actually see this as kind of the beginning of investment in like we've articulated TI2 and TI3. There is some investment that will go into TI1, but I think significant investments are going to go into TI2 and TI3 in the next, definitely in the next calendar year. Actually in the next fiscal year, I meant to say. So all of the segments into which we've obviously announced electric vehicles, but there are, 2 more additional segments into which we will be investing. Now we're currently doing our complete diligence on them and identifying opportunities there. So there will be both organic and inorganic investments into these new areas of growth. Like we've always articulated, right, we want to kind of move away from being an auto supplier. So a lot of this is either focused on EV, for example, that makes us an OEM in the categories that we go into, or it can be into new areas which we're exploring. So my sense is we're going to deploy significant capital towards those areas. And I honestly think that India right now is really primed for looking or investing in growth segments like that, because there's so much opportunity opening up on the industrial and the manufacturing side. So without stating the specific segments, which we will kind of discuss with you over the next 2 quarters, I will say that we've been kind of, very busy identifying investment and growth opportunities. across the whole spectrum in both TI2, especially in TI2, I would say.
Great. That's great to hear, sir. I have a few more questions, but I'll come back in the queue. Thank you so much, and wish you all the best.
Okay.
Thank you. Ladies and gentlemen, in order to ensure that the management is able to address questions from all participants in this conference, we request you to limit your questions to 2 per participant only. The next question is from the line of Samir Dosani from Carnelian Capital. Please go ahead.
Thank you for the opportunity. Am I audible?
Yes.
Yeah. So my question is towards Shanti Gears. So what is your overall outlook for Shanti Gears, seeing that the capex cycle is going to pick up? That's one. Second, what is the capacity utilization currently, given that we have delivered almost around 95 crores of revenue over there? And what is the time period in which we think that the order book of 275 crores will be executed in Shanti Gears?
Okay. So I think the question was on Shanti. I think that obviously last quarter was very good revenue numbers. There was also, it had some overflow from the previous quarter, but in general, we feel like if we can hit close to those revenue numbers, that will be a great target for the company to hit. And at that level, kind of the utilization though utilization is a bit tough to kind of define in a place like Shanti Gears because of the number of bespoke machines. I would say that utilization is pretty high at these revenue levels. And I think your third question was how long does it take to run through the order book? Typically about 6 to 9 months, but obviously kind of the order book will also get more input coming in the next few months as well.
Yeah, that's it. Thank you.
Thank you.
Thank you. The next question is from the line of Romil from Electrum. Please go ahead.
Hello. Sir, good morning. Thanks for the opportunity. Am I audible, sir?
Yes.
Yeah.
Yes.
So my first question is on Shanti Gears. So just want to understand, I think a lot of capex is happening, on the railway side. So if you can just briefly let us know what kind of pipeline is there, by the government on the railways, which areas, we are working on, maybe any new products on the Shanti Gears side, and some absolute number on the order book, so that we can understand where the growth can lead to.
Yeah, I think we just answered this question on order book. It's 270 crores is what the order book is at.
Okay.
And obviously on railways, we are quite strong in the railways business, and we will continue to invest there. We see it as a significant opportunity for growth, and so we will continue to kind of invest in that business. And I would say a lot of the revenue that comes off, if they come up with so much on the Train 18 side, on the Vande Bharat trains, we will basically get that volume as well.
Okay. And sir, the other question, is broadly a connected question with regards to our continuous cost efficiency projects that we, do. So earlier we did a lot of low-hanging areas, and now just want to understand what are the other areas that we are working on, and also the impact on the margins going ahead with the raw material inflation that we've seen. So how do we counter that going ahead along with the cost efficiency projects, and what would be a broad margin band that we can look at?
Yeah, so I believe that, so obviously kind of the raw material pricing, nobody can say where it's going to go.
Sure.
But I would say that there's at least 1 percentage point more to be had from the cost efficiency side and the lean initiatives that we're working on. So at least 1, if not 2 percentage points that we can get from that in the next few years.
Okay, sir. Excellent execution, and all the best, sir. Thanks.
Thank you.
next question is on the line of Sanjay Shah from KSA Securities. Please go ahead.
Good morning, gentlemen. So most of the questions have been answered. There were more was on Shanti Gear side. Can you elaborate something on that side? Are we planning to add any new products to our portfolio? Do you have any growth strategy on that side?
Actually, we always articulated that, we don't want too many Shanti questions coming in, and now there are more Shanti questions coming in and TI questions. So, I think broadly we articulate because we keep our investor communication that we manage through Shanti. I mean, obviously we're constantly looking at new products in that area, but I don't think that there's anything on I mean, it's again, across all segments, we continue to see opportunity there.
Right, sir. Thank you, sir. Thank you very much.
Sure.
Thank you. The next question is from the line of Abhishek Ghosh from DSP Mutual Fund. Please go ahead.
Yes, sir. I'll come in for some tube questions just to balance the call. So a few things just wanted to understand in terms of your ability to pass on the, price increases with the OEMs. How difficult has been that as a proposition, and how should one look at it? And, so obviously your gross margins have deteriorated, and obviously you can't go back to the normalized gross margins because the steel prices have moved up. We do understand, but how should one look at that element of it? Some color there will be helpful. Thanks.
Sure. So we continue to believe that, and we continue to have had the capability to pass on price increases. We are getting into situations now, especially when we went through kind of the last couple of quarters when steel really went through the roof, that there were situations where the OEMs were pushing back significantly. But I do believe that those situations are only at the extreme margins, right? Which is basically it's only when prices go up as sharply, as quickly as they did last year. In most situations, the OEMs have been quite accommodative and kind of cognizant of the fact that we cannot take those hits on our own balance sheet. So I would say in general, we're still very confident that we are able to pass on the price increases, but we do end up with some kind of hiccups at the extremes.
So, sir, fair to assume at the margins, assuming commodity prices remain stable from here, the gross margin should improve. We can question the magnitude, but at the margin it should improve.
Correct, absolutely. I think that's right.
Okay. And so just one thought, railways has been very soft for you all through the entire crisis, but the expectation is it might come back stronger. But just one thought, the income from the passenger railways also has been very weak. So any thoughts from you all in terms of can that capex be a little pushback given the funding situation, because railways may not be in the best position given that passenger income has been fairly weak. Some thoughts there, or if you're positioning yourself, because CG also derives a lot of revenues from there. So some thoughts that will be helpful.
Yeah, you're right in terms of the passenger revenues being weak. I think the big thrust now, and all the indications that we've got from the railways folks, is that they are very serious about these Vande Bharat trains, right? Initially, when the finance minister announced this, even I was a bit skeptical. How can they possibly get out 400 trains within 3 years, right? I mean, that's like an unbelievably high number for the railways. But the way they are acting actually now looks like they're going to give it a very serious push towards that number, right? And if we get anything close to that number, I think that's going to help. It will definitely help the CG side much more than TI. But TI also will benefit, from the coaches. But CG's benefit will be huge, and we do believe that they are going to push towards this number. So we're quite bullish about it.
Sure. And just one last thing, in terms of the exports part of it, had the container availability, freight rate being normal, could you have been better in exports, or just some thoughts there?
Mukesh, I'll let you answer that.
Yeah, like you indicated, let's say this container availability is getting normalized, but there was a lot of pipeline inventory and material waiting at ports, which is slowly getting cleared. So we hope it to get normalized by quarter 4, and quarter 1 of next financial year should be coming back to the normal situation, which will again push the exports demand, is the view we get.
No, Mukesh, I think the question was, had there been better container availability, would our exports have been higher?
Surely, yes, sir. Yes.
Okay. And the whole, steel price arbitrage also, which was kind of helping in exports, is it still continuing, or even without that, or because, there were a lot of dynamics which were playing, higher freight rates, steel arbitrage. Are those things normalizing, and will you be still competitive in a normalized scenario as far as your exports are concerned, Mukesh, if you can just throw some light?
Yes, we will be competitive even going forward, but like you rightly pointed out, this container freight and the steel arbitrage was there, which we hope in next 3 to 6 months' time, it should the margin should maybe, let's say, the gap should shrink. But even after shrinking it, we are going to be competitive in the exports.
Okay. And any new geography that you're now seeing, because the US came back very strongly for you, is there any new geography that is giving you a lot of optimism in terms of the sustenance of this export growth?
No, like we earlier said that we are very focused on the OEM side of the story, which takes almost 2 to 3 years kind of a cycle for the product development, where a lot of programs are in the pipeline, which we are on the verge of the closure. And in this year itself, almost close to 2 to 3 new programs, which we were not earlier there in the business, got approved. And the journey will continue. We are very, very focused on the product categories where we want to globally present, and the strategy will continue.
Great. Okay, so thank you so much, and wish you all the best. Thank you so much for answering my questions.
Thanks, Abhishek.
Thank you. Reminder to the participants, anyone wishing to ask a question, may please press star and 1. The next question is on the line of Anupam Gupta. Please go ahead.
Yeah. Morning, sir. A couple of questions from my side. Firstly, in the tubes business, we understand that large dia tubes has been growing very well, but I think the capacity utilization there also has reached quite a elevated level. So incrementally, when you are targeting more large dia tube sales both in India as well as in exports, how do you cater that? Are you looking at incremental investments there, or what's the plan?
Yeah, we're definitely going to expand capacity. Where we choose to expand capacity, we will decide, but we will definitely expand capacity on large dia in the next financial year.
Okay, understand. And in terms of second question, in the mobility segment, the three-wheeler launch, which is due next quarter, can you just slightly elaborate on 2 aspects? One is on where you are in the product stage at this point of time. Has the testing happened, or what sort of responses you have seen there? And secondly, on the distribution part of it, while you said that you'll start off in the south and then go north and west, but given that you don't have so much of B2C sort of expertise directly in the company, what sort of organizational sort of investment have you done there?
So again, I'll let Paul answer that. Just to give you a sense on timing, I think the timing for launch will actually kind of move to this July-August time frame. So we are slightly delayed. The timing for launch will move to July-August. But I will let Paul answer the specific question.
See, I think, from a perspective of B2C, actually we have some experience in cycles, because cycles is also basically B2C as well.
Right.
So we've taken that level of expertise and seeing what needs to get done at the distribution side for the EV three-wheeler. And so we worked out various models, etc. What kind of consumer experience do we want to get? What is the benchmarking we need to do there? How will we get there? And then we tested out some models as well. products have undergone, extensive testing, over a period of the last 1 year. Even now, there are all kinds of prototypes on the final version that is undergoing reliability tests at different stages. That's where we are at in terms of this. We are also looking at, how do we build in a better class of consumer experience, and that's what we have concentrated on and got some models there, in terms of taking our initiatives forward. Just as we are speaking, we have a whole sort of distributors, dealers interested. We looked at also what is going to be their return on investment and how will we sustain that even in the first year, which might be the challenge in terms of this. How do we keep the investment at a level where they can make a return, at the end of the year in terms of this is the kind of initiatives that we said. We built up a separate EV team also, that will specifically focus on the areas of technical, on marketing, on sales, after sales service, branding. What do we do with the, social interface, what can be applicable in the three-wheeler segment and how do we move forward? Those are kind of work that we've done. Of course, because of COVID, some amount of setback has happened, but we followed modeling levels, and minimum viable products to test all the concepts that we've been talking about internally to see that when we hit the road with the launch, we should pretty much fix up all these areas so that we can give finally the consumer a very good experience.
Understand. And just one last question, Vellayan, to you. You highlighted that capital allocation, obviously looking at investments in TI2 and TI3. So TI2 per se seems to be obviously a smaller investment which grows over time depending on the viability. But in terms of TI3, what sort of size will you be looking at in terms of investments in the next 1 year or a couple of years?
So now let me just articulate it because basically when you see, right, even Celestial is slightly larger than an investment that we might have made in a classic TI2 play, right? So, we also been kind of debating that, right, which is like, so TI3 I kind of just reserve for the slightly stressed kind of larger deals that we look at. But so I should actually say that we're going to see more activity in TI2 right now, right? But there are going to be some slightly bigger deals, right, in the sense like, with 200 crore plus EVs could be going even larger. So the general approach we've taken, which we've kind of consistently articulated for the last 3 years, is that the maximum we will go to in terms of debt levels is like twice annual free cash flows. And so that's still kind of our approach to it, right? But basically what we see is that, now the time seems to be very right for a lot of investment opportunity because there are a lot of white spaces that because of all of these different things that are getting announced by the government, PLIs in different areas, it actually is not just PLI. I mean, if you take kind of just the fact that exports are picking up in a lot of segments because of China Plus One, the domestic market is becoming fairly large and there are no defined players or in some cases import substitution. So we've been kind of doing a broad scan across industry segments and I've shortlisted a few in which we see that good white spaces that can become significant areas of significant platforms for TI over time. And so we're going to start seeding those white spaces in the next financial year. And I think you're going to see some of that activity over the next couple of quarters. So that's what I was talking about. And so specifically, I think it's going to be more in TI2, but it will be slightly larger deals than we've traditionally done in TI2. Right? So it's not like the 20 crore things.
Understand. That's all for my side. Thank you.
Thank you.
Thank you. We'll move on to the next question. That is from the line of Niket Shah from Motilal Oswal Mutual Fund. Please go ahead.
Yeah, hi. Thanks for the opportunity. I have 3 questions. One is you did highlight about PLI in auto. Just wanted some sense that how is Tube looking at that opportunity and what kind of products or role would you play in PLI?
Yeah, so PLI and auto, we've looked at it. I mean, the only category that kind of, actually, EV is the only category that kind of actually seems to make sense for us, right? And so that's what we're exploring right now as far as PLI and auto.
Got it. And the second question was on the EV three-wheeler launch timeline. Are we now on track to just launch in the first quarter? And the similar question to that was, historically we've seen in the ICE side of the market where some of the two-wheeler OEMs have gone into international markets and it becomes very difficult for the competitor to come back and grab market share in those markets as far as export is concerned. So will export also be a part of the EV three-wheeler? Well, you will do it parallelly or you might launch it after a few years?
So first off, on the EV, we are delayed. I think we're now pushing kind of, the end of July, maybe early August, as a launch for EV three-wheeler. We have been delayed. But second to your question, I don't think we'll wait 2-3 years. But initially we'll focus on the domestic market, and then we'll determine how quickly we can go to export market.
Sure, that's helpful. And the third question was, while you put all the EV business into one company, will you be looking at partnership at that company level to a JV route or diluting for some strategic partner? Is that an opportunity or this is just kept to get more focus as such?
Yes, that is an opportunity. We definitely think at the right stage, if there are partners with interest, we will do that.
Got it. And just final question, as most of the questions have been answered, your margin guidance of about 13-14% range over the next 2 years, does that stay given the current raw material situation that we have, given the cost-cutting programs that we already initiated?
Yes, obviously it depends on raw material prices. They stay at these kind of elevated levels. I mean, the thing is, if they stay at very elevated levels, then even a smaller percentage will get us the same benefit. So I would say that the benefit to be had is still there. The percentage will depend on kind of what is happening with raw material prices.
Sure. And is any product mix change? Because in the last call, we did highlight that you essentially want the higher margin products to really increase the percentage of revenues. That's one way to take up the margin range higher. So should we assume that given the current raw material environment, the product mix has to do a far bigger job as compared to raw material costs coming down and numerator denominator really flying out?
I mean, the biggest opportunity in our legacy business side continues to be exports, right? Because the exports is something that can help our margins definitely. So I think more than the mix side, it's exports being a big driver.
Understood. And one bookkeeping question is, how large is the auto business now within the engineering and the metal form business?
Do we have a sense, Mahendra? Total auto business is a percentage of
the total level, it is about 65%. 65% auto, rest of it is non-auto.
And across categories, right? Engineering and metal form, give or take. Okay, perfect. Thank you so much, sir. I'll come back into investor class.
Thank you. Thanks.
Thank you. The next question is on the line of Rahul Ranade from Goldman Sachs Asset Management. Please go ahead.
Hi, thanks for the opportunity. Just any update on the optical lens business, where it stands right now? I think the last comment that I remember is that because of the chip shortage, there was still some issue with demand coming on stream. So just wanted to get a check on it.
Yeah, so at this stage we're waiting on. We're in trial orders with a potentially large customer, and we're waiting on product certification. If we get product certification, hopefully we will start scaling that in the next quarter.
Okay. And can you remind me what's the kind of investment that has gone into this capacity right now, and what's the capacity currently?
Very small. It's about 34 crores at this stage. So it's still kind of almost at a pilot level. So we'll only scale it up once we get comfort with that. But we've only put in about 34 crores.
All right. And do we have any kind of an anchor customer who kind of ties up for a meaningful part of the capacity, and then the rest depends on the demand supply conditions? Is that the way it works?
That's what we're in certification for, right? So basically, if we get the product certified with this customer, they will become an anchor customer for us.
Okay. Got it. And just in terms of numbers, what would the capacity be in terms of number of lenses or?
Our current capacity is fairly small. We're at 500,000 lenses per month.
Okay.
So we'll only ramp up once we get, first we need to get a product stabilized, only then we can ramp up.
Understood. Got it. Yeah. This is it. Thank you.
Thank you. The next question is from the line of Megha from Pi Square Investments. Please go ahead.
Thank you for the opportunity. I just have one question on the CapEx side. What's the total layout plan for this financial year?
For the coming financial year?
Yes.
For the coming financial year, we take it to our board in the March board meeting for approval. So we are finalizing those numbers, and we'll take it to the board in March. So we'll be able to give you better guidance after that fall, right? We'll be able to give you better guidance in April.
All right. Thank you. That's it from me.
Thank you.
Thank you. We'll move on to the next question. That is on the line of Rohit Ori from Progressive Shares. Please go ahead.
Hi, I'm sorry, the questions will be related to Shanti here. I asked 2 or 3 questions on biannual basis. If you allow, then I start them.
Sure.
Yes, thanks. So, in your comments, you mentioned that the utilization of Shanti is quite high, and there was even a spillover from the previous quarter. So, with the gross margins not moving around, and it's almost in the same range of 49-51% or so, is the service part of the business, the aftermarket sales from Shanti, is that the factor that is contributing to the immense top line?
So it's not aftermarket sales. I do think that, the utilization has now gotten higher than it was. As the increased utilization was helping the bottom line.
And if you can just what would be the share from the service segment from 95 crores?
So, do you have that number? No, it's more than that. I think it's about, I think, so we'll try and get you the number. I don't know, Mukesh, do you have the number offhand?
It's a very small percentage for today.
Okay.
Company level is around between 15 to 20%.
Okay. Okay, so we're maintaining the guidance over there. Okay, if the utilization is higher and we have this ambitious target of, tripling the turnover in next 3 to 4 years and trying to double the profit, so will we see more of growth capex coming in for Shanti here?
Sorry, you said tripling the turnover in Shanti?
Yeah, that was what was mentioned in the AGM.
In the TI AGM or Shanti AGM?
Shanti AGM.
Okay, sure. Then when is the Shanti AGM? It's done.
No, I was.
Yeah. Which AGM is this?
This was the recent one, the 48th AGM.
I don't know, because the last AGM I would have been, I don't know, or did we do this virtually? I don't remember giving any guidance on Shanti for tripling the turnover. So I'm not sure who gave you that guidance, because that is not in line with that.
Okay, so I'll take this offline. I'll try to get in touch with you. Yeah. Okay, thank you.
Thank you.
Thank you. The next question is from the line of Sameer from Auto Securities. Please go ahead.
Sir, good morning and thanks for the opportunity. I just have two questions. First is, where do you see on a consolidated basis tube investment over the next 3 years on the revenue side, or a ballpark kind of growth the target can give? And the second question is on the return on capital employed side. Over the next 3 years, how do you see the consolidated ROC moving for tube over the next 3 years, sir? That's all. Thank you.
Sorry. So your first question was consolidated basis revenue over the next 3 years. Yes. Then you asked what will the ROIC, we track ROIC more than ROC.
Yes, sir.
Again in 3 years is your question. Then what is the third question?
No, those are the two questions, sir. Thank you.
ROIC, I don't know if we've got a determination. I think what we've kind of guided has been like 17% compounding on revenues. And I believe that we should continue to kind of achieve that on a consolidated basis. So you can calculate that. There is a compound of 17% for 3 years if you take this year's final number.
Okay.
You can do that.
And what will be the key drivers of growth on a like sector-wise or industry-wise? What will be the key drivers of this growth?
So I think that obviously kind of, now you can see that, first off, on a consolidated basis, you can see CG is continuing to kind of compound at a good number. So that compounding will continue. Our belief is because there's strong growth levels in CG. But within TI itself, we think that we've always articulated this, that we think that the core businesses will grow at about 6 to 9%. And that remaining gap of, again, another whatever, right, about 10, 11% or so, will come from these TI2 opportunities and any TI3 that we do. So it will come from the largest obviously bet that we're making is electric vehicles. But like we said, we're going to announce a couple more segments in the next couple of quarters as well.
Okay, sir. Thank you. Thank you for that.
Thank you.
Thank you. Ladies and gentlemen, that is the last question. I now hand the conference over to the management for the closing comments.
Yeah, no, I think thanks. Nothing specific from our side, Anupam, but obviously, like we said, as far as the auto is concerned, we will see how things play out. I don't think anybody has any good idea, but we continue to be very bullish about new growth areas, and so those are some of the white spaces that we're beginning to invest in. We've made a couple of announcements in EV, and we definitely think that some of these segments offer a lot of growth going into the future. So we continue to be very enthused about medium to long-term growth opportunities here.
Yeah. Thanks a lot, Alian.
Yeah. Okay. Thank you.
Thank you.
Thanks.
Ladies and gentlemen, on behalf of IIFL Securities Limited, that concludes this conference call. We thank you for joining us, and you may now disconnect your lines. Thank you.